Hello everyone, welcome to the IchimokuCharts.com daily analysis for the SP 500 for Tuesday, June the 29th, 2010. Well, quite a spectacular day on the market today, and we have a candle with a very, very large red body. The very large red body tells us that the sellers have made some very, very strong net bearish progress on the day between the open and the close. We also have a continuation of the trend to the downside, and this trend has been moving down for probably the last 2 weeks now. A series of red-bodied candles all the way down. We had a couple of indecisive candles the previous 2 days, but now a continuation of that trend to the downside and no break of trend to the upside in all of these candles. Now, the market has found support around the 1041.7 region, and that coincides with these previous swing lows in this large congestion area that we identified as a potential double bottom. So the market has traded just down below there. There's been a little bit of buying coming in as the market tried to trade down below there, and it's closed just around this 1041 region. Quite often, what can happen with markets when they're at extremes, and we'd have to say that this is an extreme day, is that they tend to have a day or so where they relax. So there is potential for the market to not continue to the downside. But having said that, though, this market is so bearish that the probability is that it will continue down. It's important for us to watch the low of the current candle, and certainly this 1041 region for the potential for the market to continue in a downtrend with a lower high and a lower low. Now, if we look down below there, we do have potential support down at 1029 as a previous swing low, and then down at 1018, which was an area where the market found support on quite a few occasions previously. So there is some good, strong support down below these levels. Looking at the Ichimoku indicators, we are trading down below the cloud, so the market retains its overall bearish bias in the longer-term time frame. The market is also trading down below the Kijun Sen and Tenkan-sen, which means that it's bearish in the medium-term and medium-term time frames. And we're about to have a crossover of the Tenkan-sen, the fast line, below the Kijun Sen, the medium-term line, and that would be a bearish signal. So if that happens over the next day or so, that will be a bearish signal for this market, and it will be quite a strong bearish signal. If that crossover happens below the cloud, then it determines the strength of it. It makes it the strongest signal that we can have from this crossover. If the crossover is in the cloud, it's a neutral signal, or a not so strong signal. If it's above the cloud, then it's quite a weak signal. Now, just looking at the Chiku span as well, we can see that here it's trading down below the price action immediately above it here, so that tends to add strength to the bearishness in the market. Now, if the market does turn around, and it's not likely that it will, but if it does, we need to watch the high of the current candle and watch this area around 1080 for potential resistance. You can see over the 2 days previous to today where the market tried to trade up through there and there was selling coming, and so that becomes important for the market. Also, the Tenkan-sen and Kijun Sen have potential to act as resistance for the market. So some resistance to the upside. To the downside, though, the market is very bearish. Quite a bit of decent support down below. Now, just quickly looking at the weekly chart, very important level here for the market where it's trading at the moment. And the 1044 was a previous level of resistance and then support. But also the market, and don't forget that we haven't finished trading for the week yet, but the market is now interacting with the top of the cloud. And the top of the cloud here has potential to act as very strong support for this market. So there is a chance that the market may find support around this area. Now, don't forget, though, that this candle is not complete, but there is a chance that the market could bounce off this level. We can see from these previous candles here on the weekly chart around 1044 that there was buying coming in when the market traded around there. Now, interestingly, though, the buying came in as the market traded there. The market failed to close down below there. So if the market does close below that area at the end of the week, then there is potential for the market to go lower. It's certainly showing different characteristics than it showed around this area, but the week is not finished yet. So if this market bounces off here, if we see a long shadow on this candle, then there is potential for the market to trade back up to higher levels. But we do need to watch how the market behaves down around these levels. As I've said, quite a bearish candle. Watch the low of the current candle and the 1041 region.